Muchas gracias.
Thank you very much for coming after the lunch here. I was hoping to see many more people from the empty chairs that I'm seeing, but probably people are going to keep joining us as we advance. But I didn't want to delay the start of this conference, so it's a pleasure for me to be here. As every year, we touch a subject that is very important for our audience, especially for the Latin American audience. The subject that we want to cover today is everything that it has to see emergence actors and tendencies on payments. What does that mean? So emergence actors are not the traditional banks, so those are the agencies that allow us to pay third parties. We touch on this, but not as deep as we're going to do it this year. And we have the honor to have with us to Visa, MasterCard, and the BCG group. That is one of the industry that they're in the middle of the middlemen in all the services that you are able to use through Visa and MasterCard. So we consider that BCG is an important panelist on this presentation today, so you can get information and nourish from information in regards of the demands that these companies can request from you, and the difference between that we know as a bank correspondent and what we really need to be able to pay third parties. Those look like similar things, but not necessarily are the same. So obviously, technology-wise, the financial industry have developed and advanced a lot. And with that, this new tendency, with these new actors that they are emerging in the field, where the bank industry left vacuum because of the reason that we have heard during this conference. So we're going to introduce Eduardo Dominguez from Visa. He's what is in front of Movement Solution of Latin American region and Senior Director of Visa Money. Those are the services that they provide to the banks and also to other business as well. David Goldsmith is coming from MasterCard, and he has the same product. We have the competitors here in front of you both, but well, they are cousins, they say, but and I can tell because I have been talking to them for a month now. And now Ricardo Núñez also, we have him here. He's the founder of the BCG group. He's a director co-founder in the financial system, and you might know him because that's a company that has been in Latin America for years. He works with everything to do with the SWIFT and all the requirements for payments using SWIFT. They have a lot of things to talk to you, but I wanted to let you know that you can also ask questions at the end of this presentation. Without any further ado, let me see if I have more questions here. Welcome to all of you, and I want to thank everybody because we are in a really heavy time of the day because after lunch everybody wants to take a little nap. So good, I'm gonna start with a question that I'm gonna ask both of them, and you're gonna answer, each one of them is gonna give me your answer. And the question is, I would like you to explain what are the services that you offer as an alternative different from what we call as correspondent bank services. I wanna you to explain each service so they understand what kind of service is that. David. I hope that they are familiarized with the correspondent bank services. When somebody's giving you money, a market to another market, normally there is multiple banks that they are involved in, like a middleman, moving the money. For example, I have a bank here in the United States and I want to send to a small bank in China. I have a correspondent relationship with my bank in the United States. They have a relationship with a bank in Europe, and that bank in Europe has a relationship with the bank in China, and that bank in China has a relationship with this small, tiny bank in China. So that means that in each part of the transaction, there is a middleman, a correspondent bank relationship. So you take the fees, and maybe it can be delayed with the moving of transactions. What MasterCard is doing, they acquire companies that they have an alternative model of this kind of money flow. And it's simple. The model is very simple. We have at least 1 or 2 or 3 banks or financial entities in each one of 150 countries that we are connected. And they connect with the local network of ACH, or the local payment branch or network that we have in each country, small country. And we connect that with the local currency, and when we offer that service to the originary banks, it's possible because the only thing they can do is you give me the money here, and us immediately, because we have a real-time payment system, we can send it back through that way. So what is that we are the intermediary in the different amount of payments that needs to be or go through to that money to get from here to here. So I'm going to ask Edward first, and then you're going to tell me how you connect both. So first of all, good afternoon. It's a pleasure to share with you this session. Before that, Visa, and to put you in a general context, and then I'm going to go to the details, I want to tell you the mission of our company is try to be the best way to pay and receive payment for everybody and for every corner of the world. And maybe you think that our mission is kind of crazy, but it's ethical and and involves a lot of things, and that is our strategy, or try to be the most relevant way of payment. It's not an emerging market, it's just relevant in the area of payment, international payment. This company started a few years back, and they want to take away what I believe that the Visa is just a credit card, that be recognized as a global company to process every kind of payment, domestic or international. Also, there is a big effort to alignment inside the company to be able to arrange the structures and put out a strategy, so all the solutions that Visa has outside of the credit card to process payment internationally, they are under the same umbrella that is called movement of money. So that we have solution and different solution in all the markets, Latin America, Caribbean, and two key things that engage very good. One is Visa Direct, that is for small payments, that is it goes through ACH or ATP or ITGS of the different countries, and is present in 160 countries and process payments in more than 160 different currency. It can be individual, for companies, or government companies. And the only place that it was lacking on that model is the one that we need to process more higher amount of payments, more treasury amounts, and that's why we launch in the market one area that is in charge of moving the money to deal with import, export, and moving bigger capitals and operation more sophisticated. Both platforms, they have the characteristic also that they promote the fast and the transparency of each transaction, as David was saying, to try to reduce the amount of intermediary. You can reduce the cost from one point to the other. You know exactly how much you are sending and how much you receive. So the point is the presence of Visa and the interest to move to this area where the company has a good reputation of the brand that is supported, but also the knowledge that has to do with safety, liquidation mechanisms, and etc. Excelente. So right now you understand the alternative. So by far as I understood when I was talking to them, it's not as easy as that. It's like I'm connected, I know I have been handling my credit card, people know the product, so I'm going to start and operate. It's not as easy as that. They need to follow some standards and protocols, including SWIFT. So I'm going to ask Ricardo, how do you put a third person that is the one that leverage all of this, like between the bank and the service that these companies are providing? We are not trying to sell anything, okay? I just want to disclose that. It's just going to lay the basement so you can understand and why is that existing and why the majority of the bank can have access to those payments without necessarily to support each other's in what we used to do before, that is the correspondent banking system. But we're going to talk, and it's the main point of this presentation, what are the challenges and what are the goals of this, and what are the people expecting about you as a correspondent after all. Ricardo, thank you very much. Thank you for being here with us. It's really a pleasure. I want to give like a view, very didactic and view about this, so you understand the concept. You understand what do we do this, or how do we do this. These are direct payments without any intervention of any correspondent bank in the middle. So these services, they're being offered in more than 100 countries, covering that network, and the idea is to complement the services that we have been offering. The ACG is certified in Switzerland, and we are offering this service, and you know us for that. It's to complement the idea. The idea is to complement with these new services. We have talked about this in other conversations, and personally, the payments of high value and low value, like the remittance, they have been reduced in the past years, and in the same way, the demand and needs of the clients, it has changed as well. The needs of the clients' needs have been pressuring us a lot, and you know that when the clients come to the bank, and for that reason, basically, they are here in this process, we facilitate, so make this easier to implement. So for that reason in Alumni, you see that is in any process of validation, APIs that you need to follow, and they need to be developed. We need to get a certification or an onboarding process that we had started as much as we could, and it's already developed, so the bank can use it in a way that the project is short and it's easier to implement. So basically, in a few words, that's our role. And in this way, you can see on the left, you see the banks, they send through a single window, a secure funnel, and it goes through the routing depending of the needs or the regulation that each bank has, and you start routing. Usually it was the SWIFT, but right now we have new ones, and two examples are here with us today, like Visa and MasterCard network. So as you see, it's part of a whole network. It's not connecting with the providers. It's just to have something that is making it easier to put it in practice. Sometimes you see that you like something and something could be good, but the implementation process is long and is tedious, so that delays the project. And after you go through all of that, 3 years have passed and you don't have anything yet. So this is a way that you can do it with a little bit less costly, and you have this last step kind of solved. One thing that catch my attention is mainly the importance of nowadays. We have studies that show that 80% of all the international operations, are open credit. When I used to be in the bank that I was very young, everything was through correspondent banking, and because we needed a trade financial area that they were doing all the credit cards. Nobody was moving even $1 with a credit card. With days, everything was disappearing. And with that, the correspondent banking system, we still need it because we still need the credit cards and stuff, an extension of general credit. But it's not the same service that the majority of the banks need, because between their clients, they already are requesting the credit card. So you don't want to be out. They don't want to leave you out. So this is one of the models that we have right now, and it's available for everybody, and they can be used. So Clarifying this, I would like to ask you, what are the benefits that these innovations bring to banks like the ones that we have here right now? With that question, I would like to ask you, what are the challenges that these services can bring? And lastly, how do you get ready, your company get ready to solve these issues in the next 3 to 5 years? So you can, if you forget the question, you can ask it again, and let's start with David. Let's talk about the benefits. As I was explaining before, in the model that we have right now, we have less middlemen because we don't need to have 4 or 5 correspondent banks because we have the direct connection with the ecosystem of direct payment in different markets. But the 3 benefits are simple. The first one is quicker. What does that mean? I'm sitting here with my cell phone, and I want to send a transaction with my Chase card to Thailand. I put send, and the money is like Zelle or Venmo. In second, it gets there in the majority of the countries. If not, during the same day. The first thing is the speed. It's fast, and it's very beneficial because people is sending money. We're not talking about $100. We are talking about $20,000, $15,000, and you don't know when the money is going to get there. And people that have sent money like that across borders, they probably know. I know they have lived that situation. It's a challenge. Second of all, that is very important is transparency. What does that mean, transparency? That if I send the money, I know where the money is, because there are markets that you don't know. It's instant, but you don't know where the money is. And how many you send money with the correspondent banks, you don't know when the money is. So what is its status? Like here, because we have the control of the experience from the moment that you send in the money until you receive the money, I know how much longer until the money got credited. And you have that flexibility that in the areas of operation and in all of those areas that you need the banking in the day-to-day activity, that's beneficial. And the third one that is very obvious, the economies of the transactions. Because if you have multiple middlemen, everybody wants their piece of money, right? And here what you are basically doing is you are giving them the benefit. You give it to the originary bank. In the correspondent model, the entity that makes the most of the money is not the owner of the client that is sending, and it's not the owner of the money that is receiving. No, it's like a middle bank that is in the middle that is doing the whole thing. So what we're changing is the distribution of value. So speed, transparency, and economy. Even if and benefits. What are the challenges? Challenges, there are many, generic, but the main one is like companies like BCG comes about because this is not easy to be transparent, because people have been working in banks, have been working with a traditional correspondent bank system or SWIFT, and all of a sudden they said, okay, connect with this alternative money, but no SWIFT. But even though some ones you need to keep using SWIFT, but they need to use the connection, the technology connection, the franchises that we're offering for these services. They need to be the availability of keeping both systems at the same time. And here we're talking about compliance. If we need risk screening or transaction screening, we need to have that monitoring system for MasterCard. So sometimes the provider that is doing that transaction monitor for SWIFT cannot do it at the same time, and you need to have it and do it at the same time. So the traditional bank that they have the mechanic very established, that means it's not a problem, but for some companies it's not a company. Here is where the BCG company comes along. We serve as that person that facilitates that transaction. and this is something that is building up, and it's gonna get better. Mastercard has been investing in different assets to be able to create this model even better. For example, Mastercard has been acquired a lot of companies in the cybersecurity area. One is Brighterion, the other one is Hakata, some others that help in the whole process, authentication process with the security process. So since we bought a company that was doing these transfers, it was not activated with all the gadget that Mastercard had. So one of the different areas that differentiate us, that we can have the Mastercard asset integrated in one place. So that's one of the main steps that we're going to do in the future, that is going to make that this solution will be not only transparent but more robust. So what about you, Visa, Edward? The way that I see it is that we can all coincide that the process of domestic payment, it has innovated, had developed in the past few years, but we don't see, but doesn't happen the same when we are talking about cross borders, and it's of present reason for technological issues, for security reasons, is when fintechs came up, is when they start facilitating the payment domestic wise and cross borders wise. It's when we start a little bit more relevance in these actors. And I think for a bank, it's very important to consider the different activities, the possibility or possibilities that they have, so they can increase their business, and they can, for example, transfer money to immigrants to different countries. That's an asset for developing your business. So you realize that it's a huge opportunity, that if you canalize it correctly through alternative channels, you can handle it in a good way and also bring benefits for the banks. In the same line, through Visa, we have identified more than 100 uses, from the more complex one to send money to father as a son when they are studying abroad, or operate more complex, like capital monies, and all the range of options that you as a bank would like to explore. But talking about the challenges, what I will say is that there is a proliferation of actions, that you can write a list of everything fintechs that you have globally. Is not less than 100, including in the list companies like Visa, MasterCard, PayPal, Swift, and all of those. So the important thing is to be able to decide what is the company that I'm going to analyze, that I'm going to use, what benefits is that going to bring me, and do it in the right way, or else you can engage in business with a company that they don't have enough capital to be able to survive for 3 years, and your need is something that it needs to keep changing money constantly. So you need to have the matrix and to find the economical strength, so you can value the company in that way, so it has a line in a long run that is going to be available for you, or if a company needs more capital to be able to keep existence. So because we see a lot of startup companies that we need to check, right? So there are other things that we need to be included to be able to use that option. Implementation costs, for example, that David was mentioning, and the ones that Ricardo was mentioning. It's not a small issue. Everybody wants the implementations to be broad and to be fast, but sometimes it's not that cheap. So it's a typical problem of economic problem. Like, we need to try to find the best way to be able to have it available in our platform. Other thing that is important is the risk management, and you all are here because of that main subject, right? But we see the big problems that people face. How solid is my counterpart? who is receiving the money I'm sending? Who is distributing it? There is a fintech on the other side, there is a regulator on the other side. Those are the kind of questions you gotta ask yourself. And the compliance also, the question, the key question, what kind of license this company have, where are they operating, who is helping them, who are they reporting? They report, they do SAR, they report suspicious activities or not. So with us answering those questions, you can get a better solution if the company that you are hiring serves your needs. If you are minimizing the risk factor that can come or not. And the last part of the question, Ana Maria, is what's with regards to this is a bet to a short, middle, or large spectrum. Well, it's a long run, for a far future, especially in Visa, because this company is going to keep diversifying to another areas. I think we have all the elements that we need to be different in our area. As you see, in a long run, all the acquisition and all the tools that we have done since 2017 until now, we get to the conclusion that it's not because that we are where we are. We launched a platform that it was fast form, and that was in 2017, and in the 19 Visa at Guay Airport that they were using, and they were using Visa Direct. And the same year, and the 2020 Visa continued to do strategic alliances with other companies, and in 2022 also one that is called Chums, that allow us to expand the digital wallets in a bigger spectrum and very significant way. And recently, in 2023, Visa also made alliance with SWIFT that allow us to use those mechanisms to use API and validation for payments on different accounts. And I want to conclude that Visa, or Visa's opinion, is that we are not here to try to finish or swipe down correspondent banks or SWIFT. No, I think if this market is growing that fast that we need more actors and bigger actors. So the way we see it globally have been changing so big and so fast, and so there is room for everybody, for us and for the ones to come. So in that sense, the idea is to be able to have an open mind, to analyze the different solutions that we have available, and focusing on how can I get more profit in a better way and explode it and try to bring it in a bigger spectrum. So you're going to keep advantage in this field. Not only that, you also are supporting smaller companies, giving that support that to be able to, because sometimes we see fintechs, they can offer us certain benefits, certain products, certain services that they are good, but we don't know them, they are not regulated, and we have that worry. But if we know that we have that leverage, that support from a brand like your brands, it can be a little bit more interesting, or a lot more interesting. So Ricardo, I'm going to ask you the same question. What are the risks, the challenges, and the benefits, and how are you, with the growth that is coming with our kind of business, how can you sustain this in a long run? Those are several questions. I'm going to divide it in several sections. First, I want to tell you that when we incorporate this model, some other networks of payments, we are adding the benefits that they already have. So all of you mentioned Visa and MasterCard, the visibility, transparency. All of that we added to these payments. So we're going to have the possibility to have direct payments without the need of that problem that we all have always mentioned, the de-risking. The Latin American people are suffering at first hand. These payments, they bring us all of these benefits. Additionally, in our models, what we have designed is that we advance. The first benefit is that we advance with more value, and the process of the values and the IPA, they are already developed. That's the technical step that is very complex, and we already went through that. So another element that is very important is that the banks in this design that we have designed this way, we have given them the ability to use the same connection that they already have with the service bureau of transactions. They can use the same connection. They can use the same data format. So the payments, you're going to send it in the same language, same format that you are sending it right now. And besides that, you can add the other benefits that the bank have available. So in an easy way, you add some other payments through another network. But it's a payment that is who is sending it, who is receiving it, and at the end what we need to do is the checkup. In the case of compliances, one of the things as facilitators we added is to filtrate in real time with the list. So in that way, the list, the same way that when you do it through SWIFT, you need to check of the compliances. For example, these risky payments or transactions, they are not, that they can be suspicious. We can use the same benefits or the same monitoring services that we already have. They're going to keep having it, plus the other one that we have just added. So while you're talking about the challenges for in the following years, the challenges that we have, they are in the framework of the technological tendencies that we are seeing, and they are coming, and the sooner or later we're going to have in place. In the past, in 2023 or 2022, in February 2023, we were talking about those tendencies. Especially, we were talking about the AI, we were talking about open banking, the modernizations on regards of anti-money laundering, we were talking about APIs. So all of that technology is coming, is a tendency. And basically what we are trying to do to make the next following years, do we need to start incorporating these new technologies in a way that we have always going to be in the vanguard, a technological vanguard. Another, the BCG, that we emphasize a lot on that. So make this model successful is to do always a capacity planning. So the volumes are growing constantly. Is to do a capacity planning so you can maintain the quality of the service. One thing that is different of this service to the others is that we need to put a support. We need to be a part of a support to the bank immediately. So when a payment has an issue or it has a situation, we need to attend this issue immediately. That's why they are providers that they are waiting for a payment, and to be able to dispatch the merchandise, they need the payment. So that's a challenge for us. And the other challenge that we have thought about is the capillarity. In the future, we need the capillarity of these payments to be increasing in that way that I can make a payment to wherever I want. For example, I mentioned you that we have more than 100 countries connected to this network. So we need the capillarity, so more countries, more banks, and that you have more capillarity. So that's basically are the benefits, the aggregate value, and the challenge that we think that we're going to have in the following 3 to 5 years, and we hope to incorporate those. Well, let's go through that you are all waiting, the compliances. How are we doing? What is the impact of all of this? The question that I want to ask, what is the impact of these elements that you have been talking about and the benefits that these all have? How you've been collected? So what are the impacts of these elements or with the compliance the onboarding that we have at the moment, and what can we expect the people that are sitting here in these chairs, that they were interested in a service like the one that you're offering, in that in some cases banks here in global banks, worldwide banks, because my jurisdiction I cannot touch you, or because of my size I cannot touch you. So based on this point of view, if you can share with the audience, do you have any restriction of at that level, jurisdiction, size? In a lot of cases, they have said that in some jurisdiction, for example, for internal policy, they cannot touch that system. But also, that what do you expect from the compliances point of view, of particularly AML, and if you can compare it with the ones that you are doing at the moment? Correct. It's interesting because I have been in MasterCard for almost 14 years. Before that, I was handling digital products, wallets, contactless, and all that area, touch-free and all of that. And when I was trying to do the sales area, the compliance was not the first stop that I needed to make. With this product, it's different. The story is completely different, because when I go to I'm in sales, I'm not in the compliance area. But the first step that I need to make is with product, with facts and treasure and the compliance people in my first meetings, because if not, the things get stuck. It gets stuck. And the reason why is because it's something new. And you need to follow. You just to keep going. You cannot say to stop here and let's go back. No, it doesn't work that way. What does that mean in vinculation? Transaction monitoring, sanction screening, all of that has to keep existing as business as usual. The problem is with the machine is not connected. So you need to have clear process to be able to make people feel, or the compliance group, that comfortable with that transaction. They don't going to have any issue. Even convince them that your life is going to be easier when the project is functioning and running. What does that mean? Let's put the link example. In the onboarding process, if I'm going to bring a bank to my process, to my scheme, they need to go through an onboarding process with us. They need to go through an onboarding process with our different partners, because as I mentioned before, in our model, I have a bank that is connected to the local network of the market that I'm sending the money with, but I also have a bank that is receiving the money from the banco that is connected with us. So each one of these three entities has to say okay to that bank on the onboarding process. So all that need to go through how to do diligence so it can happen. So in the monitoring area, it's a little bit more complex, because the bank, let's say, if you have batch, let's say you are sending a list and the next day they give it back to you, doesn't work, because you can have the AP instant to send the money, but if they pin you and you have a flag and it's going to take 24 hours, the value that we are trying to bring wasn't going to work, because you need to wait for the answer of the result. So you need to look in the process of the transaction. Who is the provider? Is an instant provider? If it doesn't work, how do you handle it? So in that process of designing, you need to make sure that it really fit on the transaction model that we're using. So that's what we are working on, to make sure that the compliance area is like we are building a building. So we need to put the basements. You can have the biggest spectacular business, but if you don't have a good basement, that building is going to fall. So with this, it's the same thing. Compliance, for me, is the main stakeholder. What are you saying, Jose Luis? Well, two things. leave like a main idea. This the solution that we have for the cross-border issue is not the same as the correspondent bank has. This is based, the evaluation is based on the risk that is the subject of the screening and onboarding. But with that, I would like to say Visa is not going to do anything that any correspondent bank wouldn't do. It's also a profitable issue, right? But in that line, the transaction has to have all the backup and the support to justify what we're doing. And we can identify with that if the regulators, the visa regulators, they are checking. And from this point of view, who are we offering this service? The people that are Visa mainly. It means that they already went through the onboarding process that is very rigorous. So it takes some weeks to be able to do it, to send information, who are the owners of the company, the reputation about creditors and credits and the balance sheets and everything. So when we get to the point and we are satisfied with all the requirements Visa has, at that moment we can access to the services of cross-border services with Visa, but with a second revision. So it's a process of onboarding just for those services in particular. So we go, again, more based on the cross-border services, the experience that they have, the systems they are using, etc. And in that revision, we find something that is not working. So we're gonna make a determination if the bank is gonna participate or not, because of what that implies. And as any other process of payment, Visa, the same of the credit card, use global banks that they make the process, the compensation process, and the clearing process rigorous. So with that, the message I'm gonna leave you is that the process is very safe on the point of view that there is a lot of mechanisms, control mechanisms at the beginning when the client wants to use our cross-border services, and then the daily routine to review or what is the concept or each one of the industry that is participating, or the banks that are participating, or entities that are participating, what are the amount that they want to use for the transactions, and all of that, etc., a very long, etc. And with that, the idea that I want to leave you with is the process is internal, very heavy, is as intensive as whatever a correspondent bank does. But if we use a lot of technology for this, it's intelligent, AI intelligent systems, very good software, potent and big, the ones that are most sophisticated of the industry, and not just because of the compliance issue. It's for a cybersecurity issue. Visa is a company that is being attacked thousands of times every second. We register 9 billion of that attacks in 1 year. None of the attacks prosper to breach and get the information that the company handle. But with that, I want to say you that there is a revision, a multi-million investment that we do every year to make this all the system very safe, and to make every compliant and very control that we need to have to make it happen. And then about jurisdiction, we need to comply with all the AML and FT regulation, mainly in the United States. We are subject to and also the sanction programs of OFA and the United Kingdom, and we're subject also to the controls of the financial institutions authorities in the UK, and in countries like Mexico, for example, that Visa has a special licenses. We are subject to revision constantly, national revisions in the Department of the Banks and Finances, and also the Intelligence Department, Financial Intelligence Department of different countries. So we do have an idea that the company respond to so many regulators in many areas in the whole world, that we need to have a process that is solid to be able to prove that we are capable to do what we say that we do. So in at any moment, that the reputation of the brand it gets compromised. And you, of course, you don't want to be in my shoes or in my institution shoes if this is happening. I'm going to ask another question. Let me see what you say. What has been the strategies that your company has to be able to build the link with Visa and MasterCard? What is your take? And the compliance that you need to do, and you in the link that you have with them and their clients, if there is any. I know that is part of the services to make this not only have the platform to be able to do this payment, but also to check and do the scanning of what all the sanction processes and sanctions regulations that they are up there. So can you tell me the strategies that you had with these organizations? Basically, the strategy was to listen the needs and the client's call on the other side of the banks. And lastly, these payment networks that they also call us, and they are making changes in the paradigm. So in that sense, the model that we have designed is basically part of an experience that we have for more than 20 years working in the payment and clearing sector, that we have a compromise. And you know all in this audience that the participation and commitment with our customers daily and in every operation, especially when something gets stuck, because when everything is working fine, they leave us alone. But when a transaction is stopped or blocked for something, we need to participate. So we took that in consideration. And as I was telling you, the model says that because of the same connection that you already have with the same format of data that is a standard that you were using before with us, and with your same procedures, you can act with these payments. And in that sense, you can incorporate a fourth level that is a filter, in real-time filter, to be able to study the sanction, the list. And so in that sense, we incorporate the same thing that the banks were using as a next step for these payments. So that is basically the strategy that we have designed for the compliance, based on the experience we have of more than 20 years working in this area every day, looking for them to have an active participation and fast. Something that David was saying that it makes a lot of sense is you are doing this payment, they are done in batches. So if you stop one transaction, you need to pay a lot of them to make that, and that is when you are the intermediary and you are the middleman, not only you, another company that is helping during that process. And that is something that is very important that you have in your mind, that is not only the monitoring the process, it's also monitoring the sanctions. And it's very important that you need to be very fast, because every time a payment leaves the first up for cross borders, if there is any doubt from Visa or MasterCard, it's a result to stop the services with them, because it's risky. So it's important that you comply the systems, that you have the right systems, not only for monitoring the transactions, also for sanction programs. And another point that I'm going to highlight is the validation of this system, because it's important not only for your peace of mind that you have validated these systems, but also that they are operating correctly for them and for you. because at the moment that one company like Visa, MasterCard, or the bank that you are using to make these payments, it feels that you are wrongdoing in the payments, you can be violating a sanction problem. That's the last day that you're going to have the relationship with that institution. So those actors exist, they are in the middle, and you need to learn how to use it properly. The fact that they are in there, and a lot of fintechs that they are actually leveraged by them, doesn't mean that you're going to be up on guard, and you need to actually be more tough. In some occasions, we have seen in Visa and MasterCard the visit that you receive from inspections and such those things. They are more rigorous, or that you would do to a correspondent bank, that it came with a double ob- ob- objective, like sell some products and answer the compliance question. My experience is that when they visit Visa or MasterCard to a client, it is exclusively that visit is based is to avoid talk about that. And I know because when I have seen those rigorous inspections happening. So it's not because they are not really a correspondent bank, things are easier for them. No, they are not. We have an example that is very vivid in our region. For example, the instant payment. If you do it in the Dominican Republic, for example, there we have a particular characteristic that the payment needs to be in less than 4 minutes in the beneficiary bank account. So even though that it has to be like that, you need to go through certain controls immediately. So the technology that is involved in that is part of this model that we are handling, and that's very interesting, the study case. And I'm doing these remarks mostly in sanction because in real time, we don't want to detect or find out if somebody's doing money laundering unless you know that it's coming from a capo, a drug dealer, and we know his name. But if we, for example, an AML or an AML CTF, it cannot be real time. It's after it happens. We analyze this and we analyze the activity. But when it's talking about sanction, it's super important to have those intervention programs that immediately can detect an alert, and you can take from a batch something really quickly if all the bank and with the all banks involved, and take it immediately out. And that's a challenge that we all going to have, and you're all going to have. Not only to the way of payment, also to that company, through that technology that you can implement to give that support. And I think that will be very important. I have one last question, and this is based on, I'm going to surprise you a little bit to see what you say, because still I have time, and I'm going to give you some time to answer any questions that the audience might have. I'm seeing in a lot of occasions, for example, that the banks, they're opening up. They're opening up again. They're risking, for example, the U.S. government, they were talking here during the conference, now that we have a financial inclusion. In fact, that is the AMLA 2020 law, a specific that is promote the financial inclusion. What are you giving to that mission, the United States government? But then I have talked how is sustainable your models can be if the banks will come back to start opening up and extend this correspondent banking system, to have that appetite that the regulator no put you on our wall, or when we offer these services, how can we competitive with these banks? Because at the end, one of the few options that we have available are you guys, and that's going to be a different cost than the ones that they're going to have with a correspondent bank. What is your vision? And what do you say something that it's better to see more people in the market doing the same thing. That is something positive, or that can take you out of the game? No, look, I see it on the contrary, because I see it very positive, because the more diversity in the in the stocks, the clients have more this availability, disponibility, and then you open up more the markets of companies that need that service. So if you think back in an abstract way, the world, there is around 40,000 banks, and there is not a bank that you can reach 40,000 worlds. So you cannot do it all with only one bank. It's a lot of risk. It's impossible. That's why all the banks use intermediaries. That's the way the banking got built upon. So they need to open the door and be more flexible and keep operating through the correspondent bank, traditional correspondent bank system. So it's interesting to be able to use your pay straight without using intermediaries. So this is an important factor. The business nowadays, they are getting more global, even faster than the way they used to happen before. Only with today with a cellular phone, with a computer, you are selling and buying through eBay, through Amazon or whatever. And before, that used to take 7 or 15 years to be able to reach. So there are a lot of people, entrepreneurs and startup company, that they are taking advantage of this system and fintech. And sometimes the bank, they don't pay attention to these small sectors. But nobody makes you big. The small business at the moment are the big companies in years. So if you don't take them when they are small, you're not going to have it in 15 years when that company is in the top. And so from that point of view, I think it's a space for all of us. The business is a skill multiplying from more commercial payments, just because the technology is getting bigger. I think it's a place where we all can live together. What do you think about that, David? I'm very aligned to that. I think it's a space. There is a space for everybody, to be honest, in the region. If I get Latin America, there are certain part of Latin America that the de-risking, if I see that I'm getting clients because of the risking, let's say the Caribbean, certain area of Central America, part of the clients are saying, you know what, I'm going to go with you because my correspondent is going to disconnect me, or they are ready to disconnect me. But if I go to the south, because my clients are the biggest bank in Latin America, for example, and they are not going to get disconnected. But anyway, they are coming with us. And the three benefits that they gave you, that is the speed, the transparency, and the cost. They have always been in a model that instead of having 50 intermediate banks, they're going to have only one. So I think also to the proof that we have behind this, the banks, the big correspondent bank, they are connected to MasterCard and to the other branches as well. So they themselves are using these alternative ways to be able to get to exotic corridors, not the UK or United States, but we're talking about if you want to get to certain markets in Asia, in the Middle East, things like that, to be able to have an equivalent. For example, they want to buy a company as the ones that we bought, and our correspondent bank, they don't want to do it, because for these banks, the main business are the deposits and the loans. The payment is something that comes together, but it's not the purpose of their business. So answering your question back, the same thing that Ewador was saying, there is a space for everybody, and for more that if this model get more consolidated, this kind of business is going to get a bigger part of the cake. And at the end, I have the last question. Yo creo que esto es silver lining. I don't know how to say it in Spanish, but it's the benefit that comes out of this, del de-risking. At the end of the story, what we are seeing, and I know that 15 or 16 years have passed by, when after the de-risking happened, they had given opportunities to bring to the game new entities like the bigger companies like Visa and MasterCard, that they compete the same in the market. So a lot of the banks and the consumer can keep supporting on your banks without the need of leaving and going to the World Bank or another institutions. So at the end of the day, it's going to be easier that you're going to have virtually. You need to be more patient, but eventually it looks like it's going to be a lot of more of opportunities from that the ones that we used to have before the de-risking. So with that, I want to ask if you guys have any question. We are about to finish. We have just a few seconds, but if you have any question, we can ask and we can answer it for you. I see that it's a lot of, they are quiet. With that, I want to thank you, everybody. David, Ricardo, and David, Ricardo, and Edward, for your participation today, for sharing with the audience your knowledge. And I hope that we know that you already know where they are. They can knock your doors, and you're going to open the door for them. Thank you for your attention today, and continue enjoying the conference. Thank you. Thank you very much to all of you.